Continue to look at the markets now. We're taking a look at the U.S. markets. Friday's close showed that most of the stocks, most of the indices actually finished mixed because the U.S. payroll report was actually released on that day, and it seems investors were not particularly impressed with the numbers. As against 200,000 jobs that were expecting to be created, only 74,000 was created, and so it kind of affected the outlook on the market and how they were going to be investing. And so we see that the Dow Jones Industrial Average actually shed about 0.05% to close the week at 16,437.05. The Nasdaq closed in positive territory. It appreciated by 0.44% to 4,174.66. The S&P 500 also toed the same line, finished in positive territory as well. 4.24 basis points was added to the index. It finished at 1,842.37. And replicating the sentiments recorded on Wall Street, Asian equities also finished mixed today. The Nikkei 225 is up 0.20% to 15,000, I beg your pardon, 912.06. Only the Shanghai Composite Index gave up some of the gains recorded last week. It finished at 2,003.44 points, down 0.49%. The Hang Seng is unchanged at 22,846.68. Well, in early trade today, the European equities kind of opened higher, but what you see on the screen there was some earlier numbers. At the moment, most of the indices are actually trending in positive territory, actually boosted by some corporate earnings updates that have hit the market. But from the earlier figures that we have, the FTSE 100 was trading at 0.03%. At the moment, it's up marginally 0.04% to 6,742.52. The CAC 40 is still in negative territory. It was at the time 0.08% in negative territory. Right now it's unchanged at 4,250.77, almost trying to trend in positive territory. Germany's DAX, however, is up 0.14%, but what you see there on your screen was an earlier figure that showed that the market at the time was still trying to gain a sort of stance. So it was trending in negative territory, down 0.12% to 9,462.16. Well, numbers are looking good there at the moment. As I said, the European market is still trading, and so the equities, the indices are actually looking good at the moment. And most of them, like the FTSE 100 at the moment, is up 0.06%, and the CAC 40 is up marginally 0.04%. But we'll have more on those numbers as trade goes on. Our Business Morning will continue in just a moment. Join us again. Welcome back. You're still watching Business Morning, the first edition for the week on Channels Television. Although it's a kind of hazy morning, but it's still a beautiful morning nonetheless, and it's an appropriate day for us to talk about regulations, rules and regulations on and how they will guide and form most key institutions that actually help to run the economy. Well, I'm talking about the capital market now, and we'll be looking at capital market regulations this morning on the program. I'm being joined by the head of research of BGL PLC, Femi Ademola, and Vincent Adubo. He's the director, membership and student affairs of the Chartered Institute of Stockbrokers. Thank you so much, gentlemen, for joining me this morning.
Thank you very much, Harriet.
Now, looking at the Nigerian capital market, how would you rate the Securities and Exchange Commission's performance in its role as a regulator, at least for 2013?
Well, from what has been, said and what we have observed so far, I commend them a lot because all the people involved in the capital market community are being carried along in the first instance. If you could recollect, I had the opportunity, of traveling to Onitsha when MSOT was actually, doing what I can call a kind of town hall meeting with all stakeholders, especially the shareholders. The same thing was applicable to other areas, not only Anambra. So now that they are trying to put the prerequisite, regulation in the market, as it were, which has been there before. But the point is that it has not been properly implemented. They are implementing now, and is, bringing, a very good result, and people are happy about it. You can see the recovery of the market in a way. When the market was high, it was 12-point-something trillion. We have entered 427 trillion or thereabouts. No,
13.27 trillion.
That's good. So now, apart from that, you can see the return on equity. For last year, 2013, 47%. Almost was 47-point-something%, which is almost 50% approximately. So we have recovered. It is part of this regulatory functions of SEC that made the market to become a little bit steady, and people are now focused. They are focused generally on do it right. So they have really done very well.
Well, Femi, do you take the same view, or in your opinion, do you think that there was anything different from what Vincent has just said?
I don't think so. I just want to add one or two things to it. You recollect that when the market had crisis we had in 2008 and 2009, one of the comment of analysts and industry watchers was that the regulators didn't do enough to safeguard the market, to protect the market against so many events that took place there that weren't right. So what we've seen lately is that you've seen the regulators trying to put things straight try to be more transparent in terms of dealing with what the market is about. The key issue, the key role of the regulator is to ensure that they enhance market integrity. And then how do you do that? One key thing is not just about the amount of regulation you're just putting out there, but in order making it simple for investors to understand what's happening in the market and appreciate what's happening in the market. So you've seen more transparency, you've seen more simplistic investor education, you see a lot of involvement of the SEC in internal affairs or even organizations to make sure that investors are protected at all costs.
Okay, so now looking at all of that, what would you say were the major developments, in the capital market as regards, regulating and overseeing and ensuring that the market actually maintains integrity, like you just pointed out? What were the major developments that we saw last year?
There's quite a lot of things that happened last year that you can say, you point out. One clear thing is about, like I said, SEC getting involved in resolution of issues within capital market operators and investors. If you check the SEC website, it has been redesigned to make it so easy, more user-friendly, and then you as an investor, you can go in there to see a lot of things to educate yourself. There are videos of SEC explaining the role in the market and how the market operates. There are a lot of movies that have been done to simplify and explain to investors. Because again, I kept saying that the most important thing is about the integrity of the market. So it is one part about the investors, another part about the operators, and even the companies listed on the stock exchange. So there are a lot of educative, they put it under the SEC edutainment, a lot of entertainment that are educative to the investors. Then they've been very more strict about regulation. Now there are so many things that are coming out about how they want companies listed on the stock exchange to file their returns, the quarterly returns, the minimum amount of information that is required, so that investors can take proper decisions about the information they have. There are a lot of issues, there are a lot of things that have happened within the capital market operators and investors before that are not being resolved in 2008. Some of them took some final turn in 2013 by the SEC. I'm talking about some cases that have been referred to IST and some that have been referred to the APC, the Administrative Panel Committee of the SEC, which has been resolved, to the benefit of the investors, that make them understand that their interests are being protected by the regulators. So those are kind of things that are happening.
Well, Vincent, during the course of the year, there was actually something that happened towards the end of the year. The Securities and Exchange Commission actually came up with some measures to regulate the market, and one of such measures was the increase in capital requirement for market operators. What are your thoughts on this?
Well, before I joined the Chartered Institute of Stockbrokers, which is equally a regulatory body on its own, I traded for almost 24 years, so I have been a trader. Well, I may not know exactly, because we were doing some analysis in the office. We found out that even when our, capital base and all whatnot, and our capitalization, so to say, is not up to the level of that of, US. That is when you quote it in dollar terms and convert to naira. Well, it has not gone anywhere. But if you look at, the individual, capital that is required and all whatnot, it's almost like US based. We did the analysis, but what is important to me is that it may create a kind of non-clientele business that may make, stockbroking firms to become so, focused on trading and not, servicing the clients. How do I mean? If I have 300 million, as it were, or any amount that has been associated to a stockbroking firm, to recapitalize from 70, I think
70 million.
70 million to 300 million.
To 300 million. I'm like, okay, fine. Why should I look for client? Why should I service you? When I know that I use 300 million to trade on my own, I don't need to go out and look for clients. So if they can raise that money in any way, which I doubt, they have made them, self-sustained, market-oriented people.
Well, Vincent, from what you're saying now, is it that the increasing of the requirement is a good one, or it's a bad one? It has its advantages as well as its disadvantages.
That's one good thing about life. Even as we are talking now, there are advantages, there are disadvantages. As we are talking here, anything can happen. And as any other thing, there's nothing that God created without advantage and disadvantage. The same thing is applicable to any rule, any law that we are bringing up. I just pick maybe the area that may affect investors on this. Because if you have this capital, in the real sense of 300 million, and you decide to come to trade the first day today, will I be thinking of how to buy shares for you to capitally, for capital appreciation when my 300 million is lying in my, I will be first of all take position.